Gold has been banging back and forth in this trading range for about 3 months now. I think it's about to break out. I'll show you in just a minute. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a $100 trading range on spot gold. We'll have a look at that shortly, but first, we've got a few active trades to look at, and later on, today's trading maxim. Hey, it's Friday. Let's step into this great weekend. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's check out these trades. Well, first off, Tesla's still looking pretty good. Pulled down here right to our first target, popped up again on Thursday. Hopefully it's just taking a breath here. Parabolic SAR is almost up to the break-even level here, so we'll be able to start trailing stops in the next few days. Australian dollar, US dollar popped up here toward the stop, but now it's dropped and it's looking better. So that's good. Waiting for it to hit the first target right down here at 67.48. Lastly, here's the Litecoin setup I showed you on Monday. Got this trigger right here on Wednesday, and it's pushed about halfway to the target. I'm short at 42.57 right here. Stop loss at 45.36. First target at 40.71. And that's it for the active trades. Let's take a look at today's pick. Well, gold has been in this trading range for about 3 months now, and it's looking pretty strong. We could see a breakout in the next few trading days. Just to be sure we're all on the same page, a trading range is a consolidation with a strong support level, like this one at 1670, and a strong resistance level, like this one at 1770. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. So here's the trade plan. We're going to buy a daily candle close above the range, or we're going to sell a daily candle close below the range. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average, but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number right here by this volume average, and you should get 0.75. If you don't get at least 0.75, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So what that means, let's say this breaks to the upside. We get a candle close right here, just ahead of the close on that day. You will buy. You will look down here at the ATR. You'll multiply that by 1.5. You'll measure that distance behind the entry for your stop loss. You'll measure 1 ATR above the entry for your first target. Of course, it'll be just the opposite if the breaks to the downside. If after entering the trade you get a close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the range should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade, and that's today's setup on spot gold. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to dive into the archive for our maxim of the day. Tim's trading maxim number 35. The markets can remain irrational longer than we can remain solvent. No one really knows who originated this quote, Keynes, Schilling, or someone else entirely. In any case, it's a wise notion, the point of which I've personally experienced several times in my trading career. When the market goes against them, you'll hear traders say, "Oh, I'm not worried, it'll come back." And that's very true. In all cases, no matter what level to which the market goes, it will be back there at some time in the future. The problem is the traders that say that are the ones that are trying to justify being right and not closing a bad position. There are a few inherent problems with that. The first is, how long will it take to get back to where your position is in profit once again? How much money could you have made with the equity you've got tied up if you had just cut the position loose at a reasonable time, and how much stress will you undergo while waiting for it to come back? Secondly, what will you do when your margin dries up? Will you add funds to the account, tying up more of your cash, trying to rescue a position that you should have cut loose long ago? Or will you let your broken margin you out at the risk of ending up with a negative balance in your account? Yes, that can happen, particularly if the market gaps against you overnight or over the weekend. You have to be willing to say the market is right and you were wrong and kill that position dead as soon as it proves that it's not doing what you expected. Your account will love you for it, and so will your stress levels. Again, I speak from experience in this area. Just close it and look for better opportunities. And always follow your rules. You do have rules about that, right? Remember our gold trade plan for today. We're going to buy a daily candle close above the range, or above 1770, or sell a daily candle close below the range, or below 1670. If the volume is not quite average, go half size, as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Also, don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below the video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Be sure you don't miss the next installment of the Trading Education Series next Wednesday, when I'll talk about demo or paper trading. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you on Monday.